Hey everyone, Douglas here, and welcome back to the MMT Macro Trader live stream. I finally made it. A little later than normal, but we are live. Welcome everyone.
Thank you. Good to see you.
Whew. All right, man. I packed a lot into the last 60 minutes of my life, but we're live.
Really? Yeah.
We're live. We're having fun, and I'm ready to go. I'm ready to go tonight, Bijou. So
yeah, I got you alert a little bit late. I was trying to pack a few things in. I got the washing out, but I kind of messed up the timing, so I didn't get to hang it up on the line.
Uh-oh.
Gonna miss the sun. Never mind. What's up today?
All right.
What's 13% interest rates mean, man?
What? I don't know why this is looking so weird. I'm sorry, guys. I'm focused on what the stream looks like right now. It's kind of bothering me. Yeah. So, okay, 13%. That's a very good question. That's where interest rates are headed.
That's where they're headed.
Yeah, that's where they're headed. Yeah, we'll talk about that tonight. Listen, everyone. Yeah, welcome. Let's see, Eugenio. I think you said you're taking off. Ty, but welcome. Thanks for dropping in. Sorry if you're not feeling well, man. Ty, welcome. TR, welcome to the chat. What up, Josh? Welcome. We have a lot to cover tonight, and what I want to do in this kind of first hour, I've been busy this week, was unable to put out a market recap video, and we had some fun. We had some fun stuff happening in markets, and I need to recap it. So
yes, indeed.
So we're gonna kick things off there. I had some Twitter stuff come up too, and I think there's some things that I would like to.
I'm going to enjoy listening to this live stream. When you say fun, in markets, there's always a winner and a loser. Who is it fun for, Douglas?
Me! Oh, yeah, I'm having a blast. Everyone else is like, what the hell? Hamel, welcome. Welcome. TR is Tom. TR is Tom.
Yeah. Oh, is it Tom? Yeah. Tom Middle Rob. Tom Middle Rob Grimm. Excellent name. Yeah, I'm going to enjoy listening to you then, because I've had so many sleepless nights recently.
Uh-oh.
So if I actually start on a ramble, just feel free to push my reset button.
Let's see. I got to pull up the right data to decide here. I think the first thing that I should point out. Is just today, just released today, even though the date says yesterday. Maybe it was yesterday. I've gone live on the Bob Murphy podcast. Give it a listen. If I recall, it was good.
It was good. Give me your feedback. I've already given you my feedback.
Yeah.
You more on it. I think we covered that last week.
But we will certainly touch on it again next week, though. If anyone has watched it, has questions, though, let me know. Or has adoration to give me, no negative feedback. I can't handle the negative feedback. So that is out there. If you BobMurphyShow.com. So
did you see the length? Did it get edited at all much, or is it still? What was it?
I think 147 is where we were at. Actually, I can tell you in just a second, because I had a record on my end as well. Let's see. I don't think he edited it. Let me hit properties. God, hopefully I'm not sharing my desktop right now. No one else.
1 hour 50. An hour 53.
3 minutes. Okay. And I do remember them having to cut out one. I think we did need to cut out one part. So, so that's right.
Not too bad.
That's right. Okay. All righty. So we're live there. But he probably cut out his call that we were going to have a recession by the beginning of next year or whatever. He allowed himself to extend that. But that's I'm joking.
We got to get the updates on that kind of thing, though. Like I always feel a little bit deflated that you have these people on and they make these predictions, but then the follow up.
Yeah,
I want to see some follow-up at least one time,
Yeah. I'm sure, maybe in a year we'll have another conversation when the market's still just churning along, and
right. Something like that.
Him and I are still talking behind the scenes, though. So I mean, it's
oh
good.
Really?
Yeah. We're still having a chit chat back and forth. So
good. That's something.
All right.
There it goes.
So Yeah, I do. Okay.
Go for it. It's all yours.
No, hold on. Ghost on the Half Shell, welcome, by the way. And then, yeah, Steve Keen. It was a good conversation. And that's what Bob and I are actually discussing and about to discuss. I have to send him some stuff. But that's actually what we're going to discuss, because I really think, to go on this point for a second, the Steve Keen interview that he did, I did listen to almost all that. I had to dip out right at the end there. But I think there's a bridge to gap between the post-Keynesian, particularly the Minskonian tradition, and the Austrians, right? Because they both understand that there's a business cycle that takes place, and that this business cycle is caused by something, right? I mean, they both get that sense. And this is where I at least tried to kind of push the conversation, if I recall that I had with Bob, is into the point that there is a business cycle, and I'm glad Steve pointed this out, that there is a business cycle, and that's just part of capitalism, right? And that what they see as interest rates getting pushed to zero, from now my kind of MMT informed perspective, is not part of that business cycle. It's just part of the way capitalism works.
Markets work. You could go any markets.
Yeah. I mean, it's just part of the way the free market works. It's fine. And I agree, at least for the sake of the argument, I agree that government intervention into the business cycle can exacerbate the worst parts of it.
Yeah, of course, especially if they don't know what they're doing.
I agree.
Yeah, here's agree on that.
Here's the thing. The minute you realize that your fundamental assumption of money is just incorrect.
Yeah.
And you realize that the
cycle to be damped, or you're going to expect the cycle to be exacerbated.
Yeah. When you suddenly realize that we have a floating exchange rate, right, and that is
right.
a natural, in the natural state of that in a country like the U.S., the sovereign currency is an interest rate at zero, then the exacerbated state is higher interest rates, right? Like, right. If all along the Austrian school realized that they just had the interest rate thing backwards, and they were saying something to the extent of, in the Fed, permanent 0% interest rate, keep the natural rate, like that was on their hats as opposed to end the Fed. I would be fine saying, yeah, okay, I'm an Austrian. Like, we're in agreement on that. We're in agreement. Get the Fed out of my bed, or whatever, whatever their whatever their thing would be. So,
well, I wouldn't go that far. There's a whole lot of other politics that you have to be political on.
I'm willing to meet them halfway. I'm willing to meet them halfway, at least on that, right?
On the business cycle, yeah.
Yeah, but then realize that the business cycle is just a natural outcome of the way markets work, and it's neither good nor bad in one sense, other than until if realizing then kind of the MMT point that the MMTers are it's a public monopoly, the currency is public monopoly, and so therefore unemployment is caused by the government not spending enough, right? It's an unspent income issue, the way Warren poses it. Then all of a sudden, you can start to draw some more political, kind of moral and ethical implications that have to come through. But on the pure math of it, we're not too far off. We both see the cyclical nature. The other thing too is like the Minskonians just don't see the boom bust cycle as necessarily bad. They see it as again, it's just part of the creation destruction cycle that has to take place for an effective capitalist economy.
The Minskonians.
The Minskonians, yeah.
Well, who's that? A post-Keynesian kind of institutionalist. Yeah. They distinguish business cycles from the other shape of crash. The longer period where we have really big recessions and mass unemployment is a very different kind of, the different types of Minsky moment. What's interesting about that, and I wonder if Ty can draw Steve Keen out on this, I don't know, but you get a lot of people attacking the Minsky side of MMT, or at least I guess the Steve Keen side, that they don't understand Minsky, or they haven't got it right, because people tend to think that there's a one type of a Minsky instability, but the Minsky instability, being upwards, being a kind of euphoric expectations, has many different causes, for the crash. And what Vague and Keene point out about the private debt level to GDP ratio and the rate of growth of that is a very macro thing. The underlying factors that cause a major sort of recession could be various. And so just be aware of that if you talk to people about Minsky moments, and be clear that it can happen for many reasons. There could be many things going on in the economy that exacerbate or trigger. I guess I want to say trigger, but the macro effect of too much household private debt is one of the big indicators that you're fragile. You're starting to be fragile, but no one realizes it. So it just makes it worse until it shoots up and then crash. That's a very different dynamic to a business cycle, or a business cycle recession. Yeah.
All right. So what I'm going to do is we're going to do a little market recap now, and I'll probably actually cut this out of the video, out of the stream, and make it its own market recap. So we'll just run with it. So anyway, hey everyone, Douglas here. Welcome back to the MMT Macro Trade-ins market recap. I'll do my intro. We have a lot to talk about with regards to kind of where things are at right now market-wise. I'm going to go all the way back. I'm going to go all the way back to May. Actually, we're going to go all the way back to May. I think May. I posted this in May. No, I posted this in August. Yeah, but we're going to go all the way back to May. During that big breakout, we had this big fiscal push during that big breakout. I was calling for a big rally into the summertime. And then, now I guess what I'll pull up next from here is where we were at then. Am I doing this in the right direction? Let's see. Oh, yeah. No, it was this tweet that I wanted. Yeah. And then ultimately to where we were at is we're heading into August and July and August. And what we knew in July and August is that we were going to start to see, as we head into September and October, we were going to see everything that was driving markets to that point begin to pull back, right? The primary thing was going to be that main fiscal effectively stimulus, right? That unrealized fiscal stimulus that had built up, really since things really kind of turned the corner at the end of last year. We were finally going to see that rip higher, and all of that was going to turn way, right? The other thing that was also kind of standing in the way as we were heading into that time frame is we did just have a big momentum push, right? I mean, we got almost 15% in 2 months or something like that. It was just a massive rally, right? So we had just almost a short-term euphoria, a short-term pop in sentiment getting a little too euphoric to that point. So just momentum-wise, we were ready for a pullback. A couple other things also kind of compounded at that time in terms of variables that were kind of getting in front of markets as well. The other one being, we had this government shutdown thing that was staring us right in the face. And we'll talk about a little bit more tonight because originally got resolved, but now things are maybe even looking a little trickier than originally thought. But we had that kind of facing us as well. So along the way, we've pumped all this data into this model called Deep MMT, and Deep MMT has been playing out perfectly. I mean, it's been played out perfectly. Yeah. Looking for a low this week, as it were. One of the things that Deep MMT doesn't understand is that there was going to be a huge tax payment actually at the beginning of the week after, on the 16th. But needless to say, the model's been picking up on this and doing a great job. So where are we now with stocks? We saw a little bit of a rally today, I think up just slightly short of 1%. Is this it? Are we there yet? Am I hitting buy? I've been on the sidelines. I started selling actually all the way back in August, got completely onto the sidelines by the end of August and have been just sitting in cash, sitting on my hands. What is it going to take to finally get me to hit the buy button? I'm itching. I'm ready. I've got money doing nothing, and I want to start making money. So what's that look like? The first thing, going back to that whole point about going back to that whole point about where we are at right now, just cyclically from a seasonality standpoint. Again, I posted this a while back as well on the Twitter, so you can check that out if you want to. But we're effectively at the end of that cyclicality period. I'll go back to the average 10-day return chart, and it's right around the beginning of October, where we begin to flatten out, and then into the mid of October here is when we start to see things really take off, and that's because this is when the volatility's ended and spending is starting to kick on here. So that is kind of step number one, seasonality wise. We're going to start to see the flows kick in. And
that's a bit hard to read on screen.
Is it? Okay, I'll scroll in.
I don't know if you want to look at the details.
Do I go all black with the Twitter background? No, I do the midnight blue or whatever, the in between. It just looks the most natural. Also, too, again, if you head to the Twitter thread, it's only a couple weeks back, so if you scroll down, you can find it. You also see, too, seasonally, again, the flows are going to start to kick up. So we are going to start to see the flows kicking in here as well. So that's really kind of the first big thing, is we are going to see the flows. Now, I'm going to pull back the curtain just a little bit. I'm going to show you, and I've showed this a few times before, but for me, this is the model that I'm waiting on to finally say buy. And at this point, I haven't seen buy yet at this point. It's my volatility shift or vol shift model. And it's based on a Bayesian approach. It takes in a bunch of volatility components and pretty much just says, well, I can just reset the chart, pretty much just says, look, is volatility going to be relatively suppressed, or should we expect, big sell-offs, right? Not even big sell. Should we expect high volatility? Now, high volatility can be, it's not necessarily directionally determinate, right? So my point is, if you just, you're looking at this chart and you're like, oh my God, this thing perfectly called the sell-off for COVID. Like, it's, this is the panacea. This is what we've all been waiting for. Also realize it didn't get you back into the rally until June 2nd, right? So you have to use this tool with the macro flows in context, and I'll bring that in just a second. But this is my secret weapon. If you know the macro flows are relatively strong, then what you're looking for is especially when you're not in a terribly high volatility situation, you are going to look for a pop back into the blue here, which just means that volatility is compressing, and when volatility compress, that reinforces the trend. The trend is determined by the underlying structural flows. Those are two main components. You have a bank flow and you have a fiscal flow. Again, we'll look at that in just a second. But as it stands right now, volatility is still kind of striking. Volatility still has a hold on this market. What does that mean? At the end of the day, we will eventually head higher. But in the short run, it also means that some lower targets are quite possible. I've got some other tools. We can look at kind of the gamma exposure profile. I'm not going to bring it up tonight. A gamma exposure profile that can kind of narrow in on the actual target. 4,200 is kind of that target right now. That if we hit, that might kickstart that kind of snap back short squeeze rally, and then maybe switch the model into buy mode. But that is what I'm waiting for the volatility shift model to go ahead and roll over, where everything eventually points to the main structural flows can now carry this market higher. So
explain that again. Go back to that. You're at rank 1 now, right?
Rank 1, and highest volatility. Yeah. And so what are you looking for? Like I'm looking for a jump to rank 3 or rank 4 out of rank 1 right now. Yeah.
A jump out of that.
Yep.
Like
yep.
What?
Like literally
1 day, two
one
days?
day. Yeah, 1 day is probably good enough. Yeah.
Oh, 1 day, really?
Yeah. Wow. Yeah. So how it's going to play out? This was in the update last night. How it's going to play out is we're going to get one of two things. One of two things is going to play out. One, we're going to clip 4,200, and we're going to rally like 2% off that clip. That's enough for me to say, okay, we're going to buy, right? I might even buy right at the 4,200. That's SPX cash level. I might even buy, but it's going to be relatively. I'm in complete cash right now. But 4,200 clips, I might, my strategy has always been, let's just say my trading account is $100,000. I use SPXL as my main vehicle, so 3x leverage, right? I might have a small position, what I would call small, out of the gate. That might be 25% of SPXL, right? So 25,000 out of that 100,000, that's going into SPXL. That's a small position for me, dipping my toes in. I'll probably start with something like that, right? Knowing that we're probably close to the bottom. We clip at 4,200. If it drops to 4,100, oh well. But I'm not destroyed, right? It's a relatively small position. I still have confidence that that we'll likely rip back to at least 4,200, and then when it does happen, then the vol shift will likely change and say bye. But okay, I do my first we'll call it my first tranche at 4,200. One of two things is going to happen. Either one, we'll still get a little more volatility, or we'll push higher, which I think will likely be the case. And then once it does push higher, that will likely get the vol shift to go ahead and click in and say, yeah, we have now compressing volatility, right? We have volatility compressing, and that volatility compressing is now going to be reinforcing to the longer term trend. So at that point, I'm at 25%. I'm at 25%. Volatility compression kicks in. I understand the underlying flows are strong. Maybe I do wait a day or two just to make sure the trend is established. Then I double that. Then I'm up to 50%, maybe even 75%. Right? I've got a couple other tools, the Bayes model, the MMT Bayes model as well. Maybe that gets into the highest ranks. And all a rank is really just the quartile return of that, the 40 or the 90-day forward return relative to that data. If you understand how Bayes is working out, the features are kind of the input there. Again, if we have reason to believe things are looking bullish, vol shift. By bullish, I mean the underlying structure flows are bullish. Vol shift is saying volatility compression. We should have a pretty good rally going forward. And if you look back at the main times where we had strong flows, underlying flows, and volatility compression was mostly there, it's a slow and steady move up. A really good analog to where we're at right now might be something like late 2018. I'm sorry, late 2017, early 2018. Right? We had a huge run up, and then we had volatility take over for a few months, right? We also, right? Volatility takes hold, we consolidated, and then eventually, we hit our essentially our buy target at that point. The underlying flows were kicking in. It's a very strong seasonal spot for strong flows, and volatility compression kicked in, and we were off to the races here.
But at the end was seasonal. What was there a story behind that volatility?
Yeah, that was called Volmageddon.
Was it?
Yeah, so it's called Volmageddon. What ended up happening is markets dropped like 10% in a day. A major volatility fund blew up. And, it was big fun. Pretty nasty. But you get the gist. You get the gist of what's going on here and kind of how I use this tool.
Thanks for that.
Yeah, that's the idea. So the question is, how do you know what the macro flows are looking at? The best thing to do is just calculate the net deficit surplus CPI adjusted, right? And as long as this thing is above zero, probably a pretty good chance that the flows are strong. Obviously, you have the time period where we were running a major surplus at the time from 95 to the dot-com bubble. So if you are running a surplus, the other thing you want to look at, if you're starting to get there, what does the bank flows look like? And what does that component look like, right? And there are two things you need to consider about the bank flows. One, just what does the flow look like? Is credit expanding at that point, right, from a rate of turn or from a year-over-year rate of change standpoint? Number two is going to be what's private debt to GDP. So what expectation can you have time-wise that the level of growth can continue to come from those bank flows? If it's relatively high, like it was in 2007, your expectation should be a month or two, right? If it's relatively low, and by relative, 170 is where we hit to cause the great financial crisis. I think we were in the 90s, maybe 100 heading into the dot-com bubble. We were able to grow for a few years. At this point, maybe without causing a major crisis, we can dip below for 6 months to a year as we did in 2022. But it's not going to be that long. We don't have a ton of capacity. It's not going to be 5 years like the dot-com bubble. It might be a year, 2 years. And then obviously we had, the Fed quickly kick in stimulus via higher interest rates.
AI bubble?
No AI bubble, I think. So yeah, that's kind of where we're at. I hope that helped. That's the update, guys.
Yeah,
I literally just laid it all out there. That is the secret sauce. If if anyone's I mean, look, I mean, literally, people want to get naked.
Come on, guys.
Ty is turned on by what I'm. I hope it's by the content that is being presented. No, actually, I don't hope. You know what? If Ty, if this beautiful,
only place on the
face,
internet.
yeah, if this beautiful.
Well, the only thing left is for you to take off your t-shirt there and run a victory lap. Do it, Doug. Do it, Doug.
Yeah. In a couple of weeks, man, I have been working my butt off recently, the weights and stuff. My wife and I are working out together. We're really focused. I've had some back damage done in the past, and I finally am on kind of a physical therapy route to get the back repieced together so I can start doing the heavy squats again. So give me 6 months, and if I get that six pack back, maybe we'll have a live stream on that other site. So let's see, man. I mean, that's pretty much it. That's where I think we're at from that perspective and kind of how I'm seeing things. So I'm ready. Here's my final call. I think the Bull's going to be back, baby. I think the Bull is going to be back by the end of October, by mid-October. There's this curveball with the damn tax strain that's going to happen on the 16th. If that wasn't there, I'd say the Bull is back today, baby. I mean, we're there. We might have a little more chop, but the next big thing to keep in mind is options expiration happens on the 20th. I'd say after the 20th, we really start to see things rally, and by the end of the year, I think we will certainly be above the highs that we got back in July. We could easily be encroaching into even new all-time high territory by the end of the year. That's my call. That's the bottom line.
There you go. You heard it here.
All right. That's my market update. Yeah.
Come back to that in November and have a review or something.
We're not going to come back to it. We're just going to assume I was right and forge forward.
Yeah. Of course. No education. Who needs to learn?
Yeah.
Small and deep in deep.
Anyway, that's where we're at. Bijou, let me know what's on your mind. I got a guest to my side real quick, but you tell me what's on your mind, man.
Oh, okay. Well, I was glad to hear first of all that your government shutdown seemed to get resolved, or isn't going to shut down so much. I don't know. This is a bit of a weird segue, I guess, but I've been reading a lot on some technology issues and catching up on a bit of the science.
Okay.
And these days, of course, in the past it was always just what's the latest breakthrough in fundamental physics, and I'd be reading a lot of other junk in order to try and find those or get those. But then in the general science news these days, of course, the interest is always in energy and climate change and that sort of thing. And but there was also a survey came out, which is really interesting. So I just want to quickly mention that. It's called the Ipsos or Ipos. I'm not sure how they pronounce it, survey. And it was really interesting to read. It was a survey of New Zealand attitudes on climate change. And quite a few good questions to have a look at. But I guess I just want to quickly mention one of the interesting highlights, or I guess lowlights, if you like, was New Zealanders' attitude to what their personal actions can do to contribute less to greenhouse gas emissions and so forth. And it's like the public, we've just almost got it all backwards. Not exactly, but just a couple. I'll just pull out a couple of things for the chat to chew on. One is that so we tend to rate recycling very high, and not as much, I think, as New Zealanders rate recycling 45%, whereas globally people rate it as 33%. That's quite a big difference. It's one of the bigger differences. So that's what we think is going to do the best, and its actual true rank is one of the lowest. True effective recycling is about 60, way down. What number one is the highest rank effect, and so that's like the opposite of what we should be at thinking. And our living car free of using a car. I'm not sure if that means electric as well, but whatever. It's a high energy user. We rank that quite low, 12%, and also internationally, globally, people rank that fairly low, like 18%. But its true rank is like this survey, at least they put it as number one. It's like the biggest contributor, or the biggest way you can have a personal effect on reducing greenhouse gas emissions. Also, vegan diet we rank very low, but its true rank is pretty high. It's like rank number 7.
Whoa. Okay, hold on a second. I'm calling BS on that rank.
Yeah. Well, I thought you might have something to say about that.
My understanding is the energy it takes, if the world went vegan, the energy that it would take, the output that it would take to manufacture that much food
you're talking macro effects. Yeah.
Would be far more damaging.
Could be, right?
Now, if all they're doing is measuring like the output of CO2 that cows make versus the output of CO2, obviously there's no output of a CO2 that a carrot makes. Bijou, what was hold on a second though. What was the one, what's the transportation? What's the worst kind of transportation? The thing that has 4 wheels, what's that called? What's that called? The thing that has 4 wheels that every American owns?
Internal combustion engine.
Yeah, what do those usually run in?
Cars.
There you go, chat. Once you read chat, you'll understand why I just asked you that goofy train.
Well, internal combustion engines, in a sense, run in all sorts of things. Cows, industrial machinery, everything.
Bijou, they like the way you say car. They wanted you to say car again.
Yeah, I know. I saw.
Okay.
I don't know how I say car. It's just car. I did spend some time in the United States, so it's not a pure Kiwi accent. Yeah. Anyway, no, it's a good point, right? It's a fair point. These are personal effects, so I'd have to look at the actual thing that they use for the ratings of those things. But
so Josh is saying he listened to a podcast with Clint Ballinger on Ryan's Research podcast, and he mentioned the same thing about the vegan diet not being globally sustainable.
Yeah. This is not a global issue. It's like your personal actions contributing. So I think that's a very, very good point. Okay. I totally avoided and skipped over because you don't need everyone to go vegan, right?
I get it. Yeah.
It's just personal effect, meso.
Yeah.
Micro
Okay. On an individual. Macro. Yeah. On an individual level.
Yeah. Okay. Totally. And Josh and Ryan and you are right. And Ballinger. Yeah.
Okay. That makes sense. I have thoughts on veganism. I've been very persuaded by the vegan argument, right? That we shouldn't kill animals, right? It feels okay with me, right?
Right.
The problem that I have is, one, I don't see how it stops at animals and doesn't get extended to bugs or plants. But that out of the way, and then the other thing too, this is going to shock everybody. The other thing too is everyone's like so upset about like factory farming. Like if we can just get rid of factory farming, to me, like the saddest thing is like deer hunting. There's a lot of deer hunting where I'm at. These deers are just enjoying their little lives, and all of a sudden they get blown away. Yeah. These cows in a farm know nothing else. It's like the only thing they know is the terrible life they were given, right? I almost wish you could like genetically modify a cow to where it has no consciousness and it just goes about its little business of becoming a cow. Like to me, we need to perfect the ethics of factory farming.
Well, one of the key things is to look at the chickens who get studied quite a bit and just their hormonal stress levels. That for me, that's enough. I don't need to know what it is like to be a chicken or what it is like to be a bat to just have a ethical stance towards it. Like, well, maybe just don't mistreat these things, and if we don't have to, in order to, eke out eke out survival of human civilization, and we don't need to mistreat these things. So it's like just look at their hormonal stress levels. They're terrible.
Yeah.
Terrible.
So if you can make it to where they have no conscious realization of where those are at, then let's just do that.
Yeah. Let grow it in a petri dish sort of thing. Also, well, okay. So I've been reading all this stuff, right? And there's so much cool stuff out there, right?
Yeah.
And, you know, you can get it from New Scientist if you like, as kind of a digest every week, or just on the internet, whatever channel you look at. There's some really good YouTubers that do this kind of content. I forget one of them's like Think About It or Think Again or something like that. I forget. I'll see if I can pull it up. But anyway, the point is that all this stuff you could say is really good news. If you're a real science tech person, then you know you might be forgiven for thinking we got it all covered. You know, no problem here. The science and technology will work it out. But behind the scenes, a lot of it, you realize, you sort of read a little bit deeper into it. It's just it's marketing and hype and attention grabbing, and like looking back over the years, very, very few of these technologies have really come on scale in a sort of industrial level, and in a sense, there's not maybe enough capacity and room just in terms of getting enough workers to do all of these little kind of things. And so often they're like a research thing that really gets a bit of a bump and a buzz and a big headline, and then it kind of just fades away because no one's investing, or there's something else that happens. There's constant churn over of all these, you know, great little things that only happen in research labs. So you have to temper your enthusiasm about tech, you know, being some sort of panacea in that sense. But anyway, it's still kind of useful to read that when you're a bit down. Just have a read of some of the science. It can be a little bit you know, rejuvenating, or at least a little bit hopeful. But then, okay, so just one last comment would be maybe on the farming and agriculture again, which is, you know, a major problem. And I think, you know, really we're going to have to do more vertical and spare the land for other things. So there's this one little article I read. It was, I mean, nice article. And by the way, it was, I got another tangent. A couple of articles I read had that, what's that phenomenon when person's career or occupation matches their name?
Oh yeah.
I forget what that's called, but one was a psychologist writing about how to chill and relax and you know be
kind of like my last name is MMT Macro Trader, and it just so happened.
Like yeah. Douglas the Deep Data Man.
Yeah.
And so Lauren Human was the psychologist writing the story, and the one that I'm going to talk about next is rejuvenating British rainforests. They got rainforests over there, and the guy writing it was a guy, Shrubshoe, Mr. David Shrubshoe. It was pretty cool. Anyway, it was kind of nice. It was like you know, there used to be a lot of rainforests in Britain, believe it or not. So these are not tropical rainforests, but they have almost the same magical qualities. They you know, with the heavy rain there, I think they're called temperate rainforests or something like that. And New Zealand has the same thing. We still have a lot more of it. But the remarkable effect of these engines of nature is, you know, should not be underestimated. And, you know, they need to be able to thrive and grow back, because they've been shrunk so badly that, you know, they're still really good for the environment, but you know, all that moss and lichen and all that rainy stuff, but it's just, you just got rainfall there in the United Kingdom that's just not being, you know, we're not allowing nature to use it well. And so we've got to, you know, let nature reclaim a bit of the farmland and farm vertically, I think, is one of the big things. Anyway, that's been on my mind. And,
nice.
Yeah. Oh, one other thing before I pass back to you. Very sad news in New Zealand. One of our greatest social science researchers, Richie Poulton, passed away. He was a leader of the Dunedin longitudinal study, which was a massive longitudinal study of following children as they grow up, and what affects their lives. You know, health. The children, I think, go in maybe yearly, I want to say, maybe more frequently, I'm not sure. And like they all volunteer. None of them have like dropped out, or very few have dropped out. And it's just a massively widely cited, very important study that's been ongoing. It's still ongoing.
He was young.
Yeah, cancer.
61. Yeah.
And and it really got to me because I haven't been having an easy time myself recently, but when he was interviewed, and I just actually read it. I didn't have a chance to look at it. He was just raised the issue, why, and it's New Zealand election season. We're going to have our elections very soon for a new government, probably.
Yeah.
And he was just saying, why isn't poverty like the number one issue on the agenda? New Zealand, you might not know, but we have one of the worst child poverty rates, in the OECD countries.
Yep.
And there's no need for it.
I didn't know that, but yeah.
Yeah. And he just said, why isn't this just the major election issue? And he points out from their studies that parents or families that have hardship and poverty, the children, no matter how successful they are in life, they never forget and they never fully recover from the hardship of poverty. And any MMT, and no matter how hard or cold your heart is, understands there's no need for this, because we have the real resources available.
Yeah.
And we're not getting them to people who are in need, and it affects children right throughout their lives. They never fully recover from it. Anyway, on that sad note,
no, that's actually one that is very sad. That sucks to see anyone under the age of 80 pass away. Yeah. And yeah, poverty's no good either. Definitely a social ill that can be cured. Well, and, to now jump off, segue to that subject. Do you want to know what cure? This is just bad. I can't say that joke out loud. The joke I was going to say that I'm not going to say, because it's just not tactful to say something like that, was the best way to cure poverty is by investing in markets and exploiting them with MMT.
That'll cure some local poverty there in Michigan.
But that's not true, which is why I didn't say the joke. I'm waiting for chat to laugh, but they're not. All right, that landed poorly. Oh, one viewer left. Oh, Doug, you're so cold-hearted. All right. Some of the things I want to touch on tonight were this tweet. This tweet took off a little bit more than I thought it was going to. I was just trying to. Yeah. Thanks, Josh. Thank you, Josh. Yeah. Poverty's bad, but not signing up for my Patreon. Over at patreon.com/MMT macro trader.
Can we get any more cringe? I mean, you've got to chuckle out of me. Okay.
All right. I appreciate that, Josh. I tweeted this out. I was really trying to see if I could explain in 280 characters the entirety of kind of the MMT argument on what that. Okay, everyone's freaking out about the. Really? Let me start at a better place. Rick Santelli of CNBC fame said this thing that treasury rates are going to hit 13%, and he gave this like monetarist nonsense that traders are going to go for whatever his nonsense was. I listened to it quickly, didn't really care what he was saying one way or another. But then Nathan Tankus said, hey, this guy's a clown, and it's embarrassing. Business networks still let him gibber, do this stuff gibberish, and then there were some other replies that were like, but rates could get higher, and they were still kind of coming from the monetarist viewpoint. But my point is, I never got a response back from Tankus. Not that he has to respond back. I think he actually unfollowed me. He might have followed me before this. I thought I had a follow from him. But a lot of people screaming about rates. Bonds have been collapsing. Rates have been skyrocketing, right? And my response was simply that I agree that what Santelli said was moronic, but there's nothing stopping the Fed from jacking rates, and there's nothing stopping the rest of the curve following that. And there's a lot of interest income to support the higher yield structure. I mean, I agree if the law was we're going to raise rates, but we're not going to actually pay you on the bonds. Like, and somehow the interest income didn't get out there into the private sector somehow.
Right.
You had to bury that money in the ground for 10 years or whatever. I would agree that just the higher yields in and of themselves is that gets transmitted into the rest of the economy that. It would crush things, but it's not, and I don't see that the Fed doesn't have to do that. At this point, the Fed has expressed that is precisely what they will do, assuming they can't get unemployment to tick up, that they can't get inflation to the levels that they want, and that they that growth doesn't stymie a bit, right? I mean, particularly it's the inflation factor that they're concerned about.
How do you change the dials on that Fed reaction function?
Well, you don't. You don't. I mean, at this point, they've said this is what we're going to do. So that's what they're going to do. And I finally decided, okay,
MMT can change the dials.
Yeah, I mean, a realization that you just got it backwards, but that's it. They haven't realized they've got it. Nothing seems to indicate that they realize that they might have this thing backwards yet. I mean, you're getting like whispers of like, all that interest income might be inflationary, but they haven't pieced it all together. They haven't pieced it together.
Exactly, but it speaks to some guy. I forget who it was, but I got pointed to, I guess, one of Warren's replies, and there was some guy harping on about things, about the central banks getting it backwards or something like that. And it turned out he was agreeing with Warren in the end. But the thing was, there was a little comment he made, like, these are super smart people. I think it was someone like an insider, right? Mm-hmm. And he understands that these people at the Fed and all that are really smart people. They're not dummies. They're not just automatons, with some sort of reaction function. They just look up a table and then, we have to do rates because inflation is still blah blah blah. But it's like, I replied to one of our followers, a guy Andy Lucas, really nice chap, and I just said, really super smart people can do dumb things and have a whole, if they've got a whole ideological fixation and they've got a whole paradigm that's all backwards, and they don't really permit themselves to, carefully look at the data, and there's always an option in a discipline like macroeconomics to kind of, force the data to fit your model. If that's all possible, and you don't really have a sense it's a paradigm change, you can be a really super smart genius and get everything backwards. That's the point.
Yeah,
and that's what's happened in a lot of science throughout the history.
Yeah,
and it's just like I mentioned quite a few weeks ago, the tectonic plate thing. Super smart people. these are like high IQ people, not looking at the data, not realizing that that there were actual tectonic plates that are moving around. And then the dinosaur extinction KT event thing, when all the data came in on the Chicxulub crater. Sorry, I don't know the Mexican. I'm just inventing that. Something like that. The crater in the Caribbean, and then you've got MMT. You've got a whole lot of these paradigm shifting events.
I think another great example of that is you with free will, like very intelligent.
All the data is here that we're just mindless and I'm not accepting the data.
Doesn't realize.
You got ahead of me. I was going to point out something against you on that. Well, not against you, but to be conciliatory with you. If
that was a joke, but Josh knows where it's going.
Yeah. Right. Where's it going?
Back to a debate. All right, give me the comment, and we'll forge forward.
Oh, the free will. No,
I'll bite my tongue. I'll bite my tongue. I won't respond. I won't respond.
The comment is this. Yeah. So I'm serious. So the thing about free will is right. I told you I don't know what it is or where it comes from. If it's a thing, it's at the boundary of space time.
Yeah.
Things are causal.
We're good.
The other thing is if there's free will, right? It's determinate. It's what determines the rest that physics, that the bulk conditions in physics cannot determine. And so it's deterministic. totally deterministic, like you say. But what is the part that is not determined by the laws of physics and back reactions with gravity and closed time like curves and all that? It's at the boundaries. And you don't know what is at the boundary of a space-time if you're in the space-time. You have no idea. You'll never know, essentially, unless you have a kind of a moment of some sort of divine insight or genius. But who's going to believe you?
Yeah,
It's like, no, it's not science. We're not talking about science here. And so, yeah. Anyway, you can have your joke. Then you can have your joke on me now. But I could always tell a story where I kind of basically agree with you.
Yeah.
It's just that I have the room for humanity because I understand that. Just as my personal opinion on the matter is that our free will really matters because it's deterministic, because it determines things, right? And so if you have everyone making the same sort of free will decisions, and I want to put that in quotes because like you say, it's not a roll.
This is one long comment.
It's people making decisions, however they make them with their whatever metaphysical soul or whatever it is. Who knows what that is? I don't know. But whatever it is, people making decisions, they make the same decisions. Everyone makes the same decisions all over again. Then you're just replaying a movie back. So yeah. So then it goes back to what I was saying about what was I saying about the politics? Then yeah.
Well, I don't know. We were gonna change. Well, the idea was to get on the Centelli thing with the rates, but
okay, sorry.
You took me off.
Because the central bank's reaction function, right? These smart people doing things that are out of paradigm.
Yeah.
Until they're in paradigm, in the MMT paradigm, their reaction function will be very smartly thought out and a lot of brain power going into it.
I think the thing too is I don't even think economists look at themselves as scientists. I mean. I understand. I think they think they're social scientists or something like that. But Bijou, you said something not years ago, probably a year ago though, where you're like,
probably a year.
If there were 100 trillion people, right, and like you were to then measure economic output, it would probably end up looking like a perfect Minsky model, right? If you were to look at the 100 trillion from a distance. Mm-hmm. In aggregate is a Minsky model outcome, right? But the fact that we just don't have a ton of people, the data gets kind of noisy. And you were connecting the dot to connecting that analogy to kind of the way that we look at light. And maybe you can piece that connection together in a way that I can't quite do it. But at the end of the day, we have a scientific approach to the boundaries of physics that are almost impossible to see, but we still have a complete mathematical and theoretical approach that I think can be applied to economics, but it feels so foreign because we don't have 100 trillion people to run the tests on, and also we can't stand as they say 30,000 feet above the trees or whatever. In that instance we need to stand even further to see everything in the scope. But I mean, I think we can get there with modeling, but that is not the mindset of the mainstream. They don't see themselves as a science. They can to a certain extent. I understand there are limits to. I mean, you can build a Large Hadron Collider and bounce some particles off each other and see what happens. You can't run an economic experiment like that, right? Like you can't. Right. You can't wreck an economy just to see how the particles. Just to see how the particles spread out, right? I mean, all you have is. We made the best decision we did given the information we have, and then review the outcome. And there's no way to run any sort of counterfactual outcome. I mean, it's just the outcome that we had.
Randomized controlled trials and like
that
stuff all has to happen in behavioral economics. It's very difficult to do it with the macroeconomic, political economy.
You get one shot at it.
One shot at it, like Soviet Union, Lenin goes to Stalin, goes to total mess, and it's like, oh, well, can we do it again, please? You know, we
Yeah.
understand what we got wrong now. Can we please do
Can we
it?
do it? Yeah.
Have a do over?
Yeah. Get it
No,
wrong.
no, do it. So,
Get it wrong
so,
this time.
so exactly, good point. Because there's another fly in the ointment that my simplistic sort of metaphor there didn't work out. Is that energy? So you'd have to have infinite energy to run these, continuum dynamical system type models to get it all to play out like your model would perfectly say.
Yeah.
And so when you throw in energy and resource constraints, it makes it a hell of a lot more fun.
Yeah.
For some and terrible for others. Yeah. So,
all right, so let's go. Let's go back.
To
finally get back to the thing, I'm like, I should try and craft one tweet, 280 characters that fully describes what's wrong with the Fed policy, and then it would be kind of fun is to go through this tweet, and then also some of the responses I get are kind of head scratchers because I'm like, I swear I'm communicating this in a way where you can't think that, but clearly people are. So my comeback was to kind of like understand the full MMT argument that I've been making in one tweet is the Fed is the monopoly price setter of interest rates. The curve, right, that meaning the yield curve, is the market expectation of future Fed actions over that price period or that time period, and the Fed sets rates based on growth, employment, and inflation. And rate hikes add interest income to the private sector, which will support the growth, the income, meaning employment, and the rising prices, the inflation. So it's a cycle that reinforces itself ultimately higher here. I think everyone watching this would get that, but a few that didn't is that what evidence does, and I think he's retweeting this. What evidence do MMTers have to say that bondholders use their interest income to buy more consumer goods, pushing inflation up? And the point here that was just incorrect is I don't think the bondholders that are getting the additional interest income are buying more consumer goods. I think it's trickling down. I mean, I think that's the mechanism that's taking place. Is I just think there is a demand for that additional interest income because things are more expensive. Like people are getting squeezed. And the evidence of that is they're asking for higher wages, right? They're demanding higher wages. And we're seeing that play out, right?
Classic confusion, nominal with real again, I think.
Yeah.
I mean, maybe I'm simplifying a little bit. But yeah, we don't just go out and buy more hamburgers for lunch. We're still eating one hamburger. It's just the price got up. So
so we got to ask for more money. Yeah. So what's happening is that trickle down is just occurring, right? I mean, it's just in the minute if it proof that it is happening is that if it wasn't, the economy would have collapsed by now.
Mass unemployment. I mean, even though the workers' wage demands have definitely not yet caught up, and there's people really hurting and suffering. If you don't pay the workers, they can't buy your stuff, and so that's a major trickle down effect. And yes, we know it's terribly regressive, and the workers, lower income people, are really losing out massively, big time. But if their wages don't eventually keep pace, then you could get a massive recession because they'll stop buying good goods. But they got to eat, so they're just going to go into debt, and you got to eat to survive. So they'll be buying half a hamburger one way or another.
So the next point is, again, it's a trickle down approach. It's very clear. It's not what I would want if I was king. Next up is this kind of response that the Fed doesn't control the structure, the yield structure, and they do. My point to this would be if Congress came out and said, I just sat with Warren Mosler for the last 2 hours, and he's explained to me that the natural rate is 0%, and we're good Austrians here, so what we're going to do is take any intervention from the Fed out of the market. So we're going to take control of interest rate, and we're going to create the natural. We're going to set at the natural rate. So we're going to do a permanent 0% interest rate.
Ooh,
right?
Yeah.
because we're good
Right.
Austrians, and Warren Mosler has told
Yeah,
us
yeah.
that
Because
is the
we lost
natural rate, and the government is coming in and interfering with the market price signal, which would be anything but zero.
Interfering.
Yeah, interfering with the market price signal. What would happen to the entire yield curve? Every part of it would drop to zero because it's permanent. It's now a known quantity, and yeah, we know what's going to happen. There's nothing. Yeah, there's no way that that's going to change unless there's unless there's a vote otherwise.
Yeah, totally. Non-intervention in quotes is control.
Yeah. So that's the response to that.
Yeah, that's the response.
Again, I probably everyone watching this is probably aware of that. Probably aware of that. But
give it a like.
Yeah, make sure you subscribe. All right, so that's where we're at. That's where we're at for some of the things I wanted to cover tonight, guys. Since we did start a half an hour late, it's probably going to end. Yeah, we're not going to be able to go the full 3 hours, and I gotta.
Yeah, sure.
I gotta call.
I got watching to hang up too.
Yeah,
the sun is hitting. I'll tell you one quick little thing. If you don't subscribe to Brett Scott, Substack. He just had a little headline, the headline from his recent little piece, and you only really need the headline, is that technology or tech, doesn't make our lives easier. Okay, we could debate that. Maybe it does for some of us. Tech, but this is the headline, right? Tech doesn't make our lives easier, but it does make life faster. And I think that's something for Ty Keynes and Ty and Steve King to chew on that too, because you can be a tech file in many ways, and it's a good thing. Like I said, it ties in with what I mentioned earlier about all this cool science that you can read about. But making life faster, is that necessarily what we want? And is that a good thing?
I don't know if I agree with that, but I'll have to read the article.
Yeah, maybe you could read it. It's provocative a little bit, but yeah. There's a limit to human metabolism and how fast we can go, but it's definitely the case that we have been getting like faster sort of pace of life. I don't think anyone would dispute that. And the point is it a good thing?
Define what you mean by a faster pace of life in the context of being relative.
I would say
hold on. In the
energy consumption.
Hold on. In the context of making in the context of not making your life easier.
I'm not sure I'm connecting the two there, but
because the article says tech doesn't make your life faster, it makes it or doesn't make it easier, it makes it faster.
Yeah.
So,
well,
define
the first bit is a bit of a troll, right?
Yeah,
it certainly makes life easier. That's a bit of a troll. It's a clickbaity thing, but it's the quality of the tech that you've got and you use, right? So I'm trying to not use a car at all, and all sorts of technologies that I choose not to use because I don't need them. And faster, I would think in terms of energy. I don't actually literally run faster, but I can do more things with a laptop or a computer that I wouldn't have been able to do back in the 1970s. And and so there's good and there's bad and all that things. You have to be a bit nuanced about it, right?
Yeah.
But then anyway, I just thought I'd mention that because it's something to think about. It's because there's just a huge amount of stuff people do that doesn't need to be done. And, we could be chilling out with our kids, going to the swimming pool, the beach or whatever, skiing if you're in Canada. Just do sort of more fun stuff that's lower energy consumption, lower energy use, power use. I look around the world, go into the city and I just see people, doing things, busy, turning on lights, all sorts of stuff, zooming around in their cars and, just a lot of waste, a lot of stuff that technology enables that we don't really need. I'm not one of those go back to nature people. Well, I think I mentioned, right? Do you remember like a few months ago now, I might have mentioned this Australian guy who's like a biological kind of geek, and he has some interesting ideas. He's a bit wacky, a bit out there, but he's like predicting a major crash in civilization. Mass die of people.
Yes.
And then but he does it with a smile, right? He's got
Yeah.
a smile on his face. He's like, yeah, but we're gonna go to this groovy biotechnology. Everything's gonna be biological.
Okay.
Biological this, biological that. My microphone, my LCD computer monitor, it's all me biological. No, I'm making that up, but you know what I mean. More biological than silicon electronic stuff. Interesting, kind of a visionary guy. Very weird, but it's always interesting. Anyway, that was my final thought for today, I guess. Yeah.
I'm literally on Twitter right now seeing, does Bob Murphy ever tweet out his Bob Murphy podcast?
I don't know.
I don't think he does. Oh yeah, he does. Oh no, he doesn't. That's weird. All right, I'll have to tweet it out.
He's his own little cadre of followers.
Yeah. Oh, he's got more than he's got more than a cadre. I don't know how many that is, but all right. Oh my God, yes. Oh, Josh, I'm so glad you brought this up. That we got to talk about this. Okay. All right.
Yeah.
All right.
What's that about?
I went to the wrong screen here. Which one was Beavis and which one was Butthead? Beavis was the blonde hair, right?
No, it's me, man. I don't know. I don't.
You never watched Beavis and Butthead?
No.
Do you know what Beavis and Butthead are?
Yeah. Oh, yeah. I know Beavis and Butthead. Yeah.
Butthead was the smart one. Was Butthead the dark hair guy? Yeah, it was. Yeah, okay. Does Matt Gaze not just look identical to Butthead? I mean, Jesus. So we got Butthead over here. Yeah. It was a great show. I was young when that was out, and my mom let me watch that show. Oh, what a cool mom! What a cool mom! What a great show. I've tried to watch some clips of the reboot, but it ain't clicking for me.
Too many nostrils for me, man.
33 trillion. I was pumped that the government shutdown never happened, but I got to tell you, this is concerning. I mean, we now have deficit hawks effectively in control of the Congress right now, and I could see Biden going along with something like that. I mean, we'll have to see how it plays out. But this is the narrative now, and we'll be 45 days out for another vote on the next budget. But if there's a concerted effort to trim the national debt, this is not good. We'll have to see. The good news is from a investor. Well, if you're a bull and you want the good news is a lot of the spending is not discretionary spending, and it's going to be very difficult to cut, right? It's going to be very difficult to cut. Obviously, first and foremost, they're not going to cut interest payments. So, I mean, that's a huge chunk right now. They're not going to cut. Well, maybe they will cut Medicare stuff. Social Security will be really hard to cut, but a lot of the stuff is going to be difficult to cut. To make a substantial change, but maybe it's an agreement, right? I mean, maybe it really is that something like that gets put down. Maybe they do raise taxes on the rich to start paying it down. I could see a path. Maybe it takes until 2025 for this to finally come to fruition where this is a major impact. But this is how the beginning ends, and if these guys take over, it won't take too long. And if you get although here's what's really weird is
it how the end begins?
Yeah, because the end game would happen at that point. It would begin this way. Yeah. The thing is. I mean, it looks like a Trump presidency is it's 50-50 at this point, right?
Really?
Yeah, wow. It seems quite. I don't say quite likely, but I mean, I wouldn't. it would take more than even odds to bet against it. Let's put it that way. So if a Trump presidency happens, but Trump obviously is not an MMTer, but he certainly gets that debt isn't bad. So I mean, he has a bit of at least the kind of an MMT intuition. So I don't know if he'd go along with balancing the budget, or
he's just a weird dude.
Yeah, I mean, would the gain of power be enough for him to throw aside maybe his economic intuition and say, I'll balance the budget,
Yeah, come in like Caesar, forgive debts.
Yeah, well, not forgive debts. Stop paying Social Security and Medicare. I mean, that's what he'd have to do to balance the budget, right? Get everyone off welfare. I mean, what Clinton did, right? Could he come in and become a Clinton again? Yeah. Right. But that's my thought. I mean, that's my thought on the Gates thing. This is concerning. I mean, this is concerning. The nut jobs. One flew over the cuckoo's nest. We're kind of the worst of the worst took the reins.
Total. Just complete ideologues, man. Those folks, they really don't even want to look at the data, and they just don't care.
Yeah,
they're never going to be MMTs that way. Whereas, like you say, Ronald Reagan, who am I thinking of? Dick Cheney and Bush and Trump. They're kind of like dark MMTs or whatever.
Yeah. I mean, it seemed like. In
a sense, like I feel bad for you guys, but maybe it wouldn't be bad if Trump got back in. I don't know. I mean, it would be terrible. It'd be terrible. But I don't know. Yeah.
It'd be kind of interesting if he did win election because then he would be term limited after that, right? So I mean,
right. Yeah.
I think the biggest risk that Trump really posed and is he certainly posed a risk and it played out January 6th and everything that played out after that or after the election. He posed a constitutional crisis risk accepting the norms of society and that sort of thing.
No, I fully accept this. It's not worth the risk at all. So
yeah. So anyway.
if you're out there, you believe in a democracy, at least should give it a chance, maybe. Yeah. And so you don't want to vote for Trump or enable him at all. I can hear others like he who will not be on the name. Don't be a blue no matter who sycophant, but you do have to worry about what happens if you put someone that just crazy. And he's not like he's a fascist, like out to destroy your constitution or override your democracy. It's just he doesn't care. He's just doing everything for himself, and whatever chaos surrounds him, he'll just go with it, right? It's just madness. Anyway, shouldn't dip my toe too much into U.S. politics.
Yeah, I'll bite my tongue. I don't know. Yeah. Got some Dota playing for Zero Shot over there. Zero Shot, do you follow like Valve stuff pretty closely? Or are you some of the new games are coming out with? Or are you just
I've been on to games. I gotta go. I gotta hang up some washing.
Are you just a Dota fan? How do you know we're talking games?
I don't know. I've heard of Dota. Is Dota a game? Massive online role-playing game of some sort.
Yeah, close. It's not a massive online role-playing game, but
Death or Take. Doom or the
Dota. Ooh, CS2 is fun, man. I actually tried, Hamel, I tried to start up a stream, but the way CS streams is kind of janky, and I only had time to play one game and couldn't get it going. But yeah, I think I am going to do the Friday night stream thing or something like that. I'll eventually give that a go here soon. I've got some other things I got to kind of prioritize.
Defense of the Ancients. You think,
I
what
didn't.
sort of genre is that? Is that like fantasy kind of dragon type
Yeah.
ancients, or is it
What are they?
mystical stuff?
What do they call Dota? A real-time multiplayer action RTS.
They have magic in that universe or something?
Yeah,
Is
yeah,
it
I
like
think so. Yeah, I
magic and
think so.
stuff like that?
Yeah,
Wizards.
a MOBA. That's what they're called. Yeah.
All right. That
Um,
sounds like fun for you guys.
it is fun. It is fun. You said you like open world. AC Mirage is out soon. I did, Josh. I did start replaying. Someone mentioned this. I did start replaying Cyberpunk to eventually get into Phantom Liberty. Good stuff.
We've already got like 1, 2, 3, 4, 5 different games. Oh, World of Warcraft 3, 6, make it 6. How do you guys play all of them? Can you just literally do it like for 15 minutes? And
Yeah,
that's it or something?
yeah. Well, half an hour here, half an hour there.
Oh, I see. Okay. Well,
I've got
that's all right.
I've got a great wife too, so you know.
Yeah, that would help.
I do Zero Shot. I do kind of agree with you. I'm very competitive, and I do like the multiplayer angle. I don't disagree. And I'll play single player games. The Best Wives lane with you and MOBAs. Yeah. I will agree that when I do play single player games like that, include fighting against AI, that I just put them on easy and just kind of play it for the story. So yeah, those are kind of my thoughts. All right, we'll get back to economics here now. So as Bijou
It's okay. We're winding down. No
dips
worries.
out, dips out
You
mentally.
can keep going again. Yeah.
Let's see. It's pretty much what I got for tonight, guys. I might actually wrap this one up soon. We should have some. Well, yeah. I mean, it's almost 10 o'clock anyway, so that would have been 2 hours, regardless. Had I been able to start on time. Taxes fund government spending. Ty, that's a very good question. And yeah.
Wasn't a question. He's trying
to get me ticked off. Yeah, I think that's where I'm at. I think the risk of the government spending thing is heightened more than ever. Obviously, it's going to take a while for that to play out into the real economy. And again, I mean, I don't think that's like we got to sell now. I mean, we could have 2 years of growth up until that point. So let's see. If you are just tuning in right now, I did go over kind of the main recap. I spent a lot of time on the recap, about 15 minutes into the start of this. So if you do rewatch this and you're interested in that took place about 15 minutes in.
Yep. Also, let's pop in the chat here another little geeky thing from Rashad Ahmed.
Okay.
On deposits. I think you and Ryan alerted me to that.
Yeah.
It's a nice little geeky read because you've got it's like interesting because where do bank deposits go, so to speak, and they can go all sorts of places, and it's not necessarily a big concern at all.
Yeah.
So little bit of stuff to
that was a really good thread. I agree.
Yeah.
That was. All right, Bijou, I'm gonna let you take us off to the end of the show.
All right, man.
If you want
Been
to.
Good chat. Thanks everyone for joining. So today I'm going to give you and Josh, it's okay if you make fun of my lack of rhythm. Don't mind. Here we go. This is a little number called Tap That Keyboard. Goes like this. Oh yeah, tap that keyboard. Oh yeah, the dimes go Richwood. Oh yeah, those treasury bonds lighting up that fat cat's fronds. MMT ain't saying money's free. Vote for that spending, you political bees. We ain't got no time to waste. Planets burning, sinking under waste. Oh yeah, so tap that keyboard. Oh yeah, the dimes go Richwood. Job guarantee wouldn't be that sweet. Keyboard helps the worker make ends meet. Zero policy rate, the base case, mate. Don't be telling me that's the money out the gate. Always got the cash for the war, my friend. Well, you ain't no friend. Go stick your ammo up your fat rear.
Oh my God.
Central crank is cranking out the interest flows. Vacations go up. Rolls Royce grows. For the old mug yachts they be making. Can't say they're also eat the inflation. Oh yeah, tap that keyboard. Oh yeah, the dimes go Leeward. Hydrofoils racing mad in Dubai. Meanwhile, neighbors eating cat food pie. Got a finger wag when I swore on a blog. I was only JFC. Can we give them all a job? We got no time to waste in God's own land. Rugby can lose, but we can't burn our land. Oh, yeah, tap that keyboard. Oh, yeah, Mosler goes sainthood. That is it for today. For more bad rhythm energy rap, join us again next week. Same MMT time, same MMT channel.
I love it, man. Tapping that keyboard. Ty, thanks for the super chat, man. I really appreciate that. Glad the show went well. Josh, I'm sorry we're wrapping up just as you asked a really good question. I've copy and pasted it. We'll get to it next week. In the meantime, have a good week, everyone. We will see you next time. Take care.
Bye.
What?